Good morning, traders, investors. Dale Silver, Trader Boys. We've got a continuation of what we're looking at yesterday. We've got cyclical rotation. So money is coming out of big tech and it's flowing into the smaller caps, which is going to affect the Dow as well. So you can see here that the NASDAQ is just above zero, and yet we've got the Russell 2000 up 1.1% and the Dow almost up 1%. We've got the dollar down today. Now we're also seeing money flow out of the major markets, which means money's coming out of bonds, coming out of the commodities here, and coming into the stock, the equity markets. Right? Now, we're hearing news that the virus is receding, so we're getting a lower number of cases being reported today. So that's really coming in. That's affecting these stocks right here substantially. So, these stocks right here substantially. So you can see 5, 6, 7% up moves on this. I got a nice little play on this one on Friday, so this is working out very beneficially to me. Right now, this is the stocks I'm looking at today. This is my watch list: is IPHI, EBS, TER, PFSI. So these are some really strong stocks here. So we'll be looking for setups on these today, and we'll kind of give you a report on those tomorrow. Now let's look at the Dow 30 real quick. You'll see here the only real big two stocks that are down in the Dow 30 are the big techs, Apple and Microsoft, and you can see Walmart here struggling a little bit. Other than that, these stocks are up, substantially, 1 to 2%. So everything's moving beautifully there. Let's jump over. Let's look at the news for the day. We've got short-term energy outlook coming out in just a couple minutes here. Housing starts is going to be coming out at 8:15. And then PPI Producer Price Index is coming out for the U.S. here. That'll be at 8:30. And the only other thing that's really happening today is the FOMC is speaking here. So these guys speak all the time. Not really a big deal. And then we got mortgage delinquencies. This could be heavily affected here. This is going to be an interesting number to kind of look at how this is going to play out in the financials and on the banks. Jump to the charts. On the S&P 500, it is fighting for a new all-time high. So we're at 3370 right now, and the all-time high was 3397.50. So we're only 27 points off the all-time high at this point in time, and we're coming into 8 o'clock in the morning here. So it's fighting. It's coming in now hard. Now you can see this trend line through here. We've hit on this a couple times, and we just hit it again, and it really does struggle there. So we're inside this supply area coming into this trend line here, and I think the market's going to do whatever it possibly can to try and break through this and put a new all-time high in. You get a new all-time high in the market, that's going to be massive positive news to suck a huge amount of money on the sideline into the market, only to sell it off, just to retrace it. That's the games they play in the markets. Hey, on the Russell 2000, this is where the strength is. I mean, look at this. Just 1, 2, 3, 4, 5, 6, 7 days, and 7 strong days up. So we're hunting this upper supply level, hunting this upper trend line here, and we're not far off that. So a huge amount of money coming into the Russell 2000. It is super strong, looking good. Now you'll see a completely different picture here on the NASDAQ. Let's start with the daily time frame on the NAS here. And you can see yesterday, Friday was down, yesterday was down, but we did have a huge buy come off the low here yesterday, late in the afternoon. We did come in and we hit that the demand level there, and that's where we got the low of the market came into play right there, right on the moving average, 13-period moving average as well, the daily time frame. So this would be healthy, would be good to get the retracement down into this demand zone again, down to the lower trend line, back into the moving averages. And that's where we could then look for the reversal to take the next trend to the upper direction. Right now, if we get rotation out of equities, out of stocks, into commodities and bonds, what you'll see is the S&P drop, which will drop the NASDAQ even further. Right? But right now, what we're starting to see is what we call is more of a healthy market. It's not 5 stocks leading the markets up. It's actually the stock market leading the market up as a whole. So we're starting to see a much more healthier market, which could result in a little bit more selling of the big techs. So right here we're into a level of demand right now on the 60-minute time frame. This is coming from midday yesterday. So buying pressure there. We kind of stalled out there, and in the overnight up we went. So we've come deep in this supply area. This supply does not exist anymore. It is out of the picture. So come off this demand level. If this demand level can hold, we can get back up into these supply regions and so on up the top here. So that's not looking too bad if this demand level, and then we could have a solid stock market day. On the VIX, right, longer-term view of it is you're not getting big institutions buying puts on the S&P 500, so this is showing some confidence. The VIX could actually now drop all the way down and fill this gap right in here. So we could see the VIX down in the 17s. Now we get the VIX down in the 17s, be ready for a decent retracement in the stock market. That's coming in low. On the oil front, we're coming in on the daily time frame. We're hitting the 200 period moving average. We hit the 200 period moving average just a couple days ago, and that did create some selling and pushed it down. We do get a nice retracement here, a nice solid move to the upward direction here, and oil is moving up on. There's a lot more hope that coronavirus is going to recede and decrease, and things are looking promising, which means the economy is going to open up, which means we're going to have greater demand on oil. So this is why the oil front is moving to the northern direction. Now, gold. Gold is in a daily demand level as well as a smaller refined 60-minute demand right here. So you've got an opportunity. We've been talking about this one for a couple of days. If we can get that retracement, you can jump on board the gold train. Now you can see this is just tagged that demand level right there and reversing. So you could watch this, and if you want to take a stronger entry point, now you've got supply just above us, so it's likely to come up, hit the supply level, and retrace back down. So you can wait for the retracement and get the entry there. You want to come into this early because it just may pop. Once it trades above this candle's high, you can take that entry, and you'll be taking the entry on strength, right? And just put your stop loss below here. If you wait for the retracement, wait to get your entry at a lower point, right? And put your stop loss below here, which would be a much better transaction in my opinion. This is Dale Sugden, Trader Boys. Have a phenomenal Tuesday, and we will see you bright and early Wednesday morning.